So yeah, the recording is on. Once again, welcome everyone. So as I wrote the text into the live section, I'm in the live session section in Discord. If you have a recommended topic, if you have a topic that you don't really understand, you need help, you need guidance with it, this is your time. This is the time. I'm going to explain one topic. I'm going to explain one topic. You're going to choose one topic. Just let me know. Just let me know what will be the educational topic in this session. Any idea, guys? Anything that you need help with? Any concept you don't really understand? Come on, guys. I have to trade these ranges and when to know if we are really bullish or bearish minute 15. Entry models, structure for minor and major. And it's much like this. Okay. Come on, I'm waiting for more. I'm waiting for more. Shoot your shots. When there is bigger wicks in 15-minute or 5-minute, can we mark out the supply or demand multi-time frame alignment? Pedro, I just literally created a multi-time frame alignment last week. So I just created that topic a week ago. Want to focus on minor structures. We don't really trade. So guys, this minor, major structure, I don't know where you learned it. I don't know where you heard it. We don't trade this. We don't use minor structure. Technically, minor structure is substructure. We just simply trade the trend. We just simply trade major structures. We just simply trade the main movements. We don't care about in between shitty price action movements. Just focus on the main movements. I don't know where you heard these terms, but most definitely not here. Can we refine it to the 3-minute one? Not clear. That's a really rare occasion. Difference between liquidity to take, higher time frame entry, and liquidity to target. That's a good one. That's a good one. I know, but when we do refinements, we focus on 5-minute or 15-minute. When was the question? Refinements focus on 15-minute. Technically, 5-minute and 15-minute is the same. 5-minute is only for refinements. So, okay, let this be the first question. So 15-minute is, our major structure time frame. We technically trade based on the 15-minute structure. So, for example, 4 hour is bearish, 4 hours creating series of lower lows, lower highs. And when 15-minute lines up with the 4-hour structure, so this 4-hour leg looks like this on the 15-minute chart, we're going to trade these downside movements on the 15-minute chart, right? So we are trading based on the 15-minute structure. If the 15-minute structure, so here's the 15-minute structure on this leg. If the 15-minute structure is bearish, we're going to trade the 15-minute/5-minute zone taps, right? Let me just make it look better. So we're going to trade the 15-minute/5-minute zone taps. So this leg is this one right here. This is the 4-hour. This is the 15-minute. Okay. So if there's a 15-minute zone somewhere around here on the extreme, but we have this regional zone here on the 5-minute chart, and price mitigates this 5-minute zone and prints a confirmation or reaction on the 1-minute chart, giving us the entry opportunity, giving us the entry criteria, then we're going to enter on this 5-minute zone. How will this the 5-minute structure look like? More likely, the 5-minute will change character somewhere around here. But we don't care about the change of character right there. We don't care about that 5-minute just turning to bullish because our main major structure is the 15-minute chart. We are following the 15-minute time frame movements. And of course, you have a chance to take longs up to this 5-minute supply zone, or up to the 15-minute extreme zone. But mainly, 99.99% of the time, we're going to trade the main major structure, which lines up with the 4-hour, which lines up with the 15-minute chart. So the 4-hour and the 15-minute are being lined up, both are bearish. We're going to trade the 15-minute short side. Why? Because these have the highest probability. These are the highest probability setups. And if you're trading this side of the market, you're going to bank profits. You can just, I know the question was that which structure are we using, the 15-minute or the 5-minute? Definitely the 15-minute. We are using the 15-minute. 5-minute is only for zone refinement. So we are using the 15-minute for the technically the structure and to identify the lower higher time frame bias. And we are using the 5-minute chart to just simply refine the 15-minute zones and to look for possible retracement points. And technically, that's the purpose of the 5-minute chart, because there will be lots of 5-minute zones that are invisible on the 15-minute one. But there are still 5-minute zones, and 5-minute has a power. And if price can react on these 5-minute zones, so once again, for example, here's the 15-minute zone, this is the 15-minute, here's the 5-minute zone, price reacts on this 5-minute zone, gives us a perfect 1-minute confirmation entry. Then if you're waiting for a 15-minute zone up here, you're going to be missed out from the trade. So we are using the 5-minute zones for refinements, the 15-minute for the bias technically, for the lower, higher time frame. Okay, liquidity target and liquidity take. This is a good topic. This is a good topic. So difference between a liquidity take, higher time frame zone / entry, and liquidity to target. Okay. And there's another one. When is liquidity to target a criteria? When is liquidity to target a criteria? If we zoom out, we always have liquidity to target, how far it should be maximum. Yo, okay, this is a good one. These are good ones. So, first one. So this will be the educational topic in this session. Difference between the liquidity to take, higher time frame zone / entry, and liquidity to target. Okay, so let's just take a look at the structure. For example, we are having, this will be the 4-hour structure. We are having a bearish 4-hour structure. This is the bearish 4-hour structure. For example, here's a 4-hour zone tap. Let me just read the chat once again. Okay, I will answer the chilling markets question, as I said. So here's a 4-hour zone mitigation. Okay, I'm just simply drawing up a simple structure that we usually see. So here's a 4-hour zone mitigation. Okay, inside of this 4-hour zone mitigation, we are going to have a 15-minute change of character, right? So the 15-minute structure is coming up, 15-minute change character. It will print a 15-minute change of character somewhere around here. We'll print a new 15-minute zone. Okay, here will be a new 15-minute zone, and price will change character inside of this 15-minute zone on the 1-minute chart too, and we'll print an anti-opportunity right here. Okay, as you can see on this chart, we can't really identify a liquidity to take, right? Not for the zone, not for the higher time frame zone, not for the lower time frame zone, not for the entry zone. We can't really see a liquidity to take for these zones. Why would it be a good and high probability setup if price sweeps liquidity? Okay, so how would these scenarios look like if it would have liquidity? For example, just take a look at the 15-minute. So just imagine that the price mitigated a 4-hour zone right here, created a 15-minute change of character. Here's a 15-minute change of character after a 4-hour zone mitigation. And price, for example, prints a double taps, prints a trend line liquidity or something like this for the character changing zone. So we're going to have a 15-minute zone right here after a 4-hour zone mitigation. Okay, in this scenario, it doesn't have liquidity. There's no liquidity for this 15-minute zone. Okay, that's still a good probability setup because there could be liquidity for the 1-minute zone. But if the 15-minute zone, for example, creates liquidity, so there will be liquidity right here for this zone. This is the first type of the liquidity to take for the zone, for the higher time frame zone. Why will it be high probability setup? Simply because if price sweeps liquidity, so if this liquidity is getting taken out, there will be liquidity, you know. If this liquidity is taken out, then if this zone is getting mitigated, there's a really, really low chance that this zone will be swept out because liquidity has been swept into this zone, meaning orders have been swept out here, meaning new orders will be placed right here on this zone. If all of this happens, so if price sweeps all of these orders and taps this zone, then there's a low chance that price will break above this zone because the power of this amount of liquidity that has been swept into the higher time frame zone has enough power, has enough chance to reverse price to the downside. This is the first type of liquidity to take. Second type of liquidity to take for a higher time frame zone is, for example, if price comes up to the exact same 4-hour zone, it doesn't have to be a 4-hour zone mitigation. That it can be just a simple 15-minute zone mitigation too, but I'm not talking about this. So, okay, price, for example, creates double taps or triple taps inside of the 4-hour zone. Okay, but changes character to the downside. You know, this was the last structural low point right here. Price changes character here to the downside. And, it will leave behind the 15-minute zone somewhere around here. But this 15-minute zone is part of the liquidity. Okay, there's triple taps about the zone, right? If this happens, so if price creates, you can just simply backtest this. Just listen carefully and take notes, because you can just simply backtest these scenarios. You will find lots of examples for this kind of a scenario. It doesn't have to be a 4-hour zone. It can be a 15-minute zone too. It can be a 5-minute zone too. But you're going to find lots of scenarios for this. So if there's liquidity inside of a higher time frame zone, let's just talk about the 4-hour zone right now, and let's just talk about the 15-minute structure. So if there's liquidity inside of a 4-hour zone, triple taps, double taps, trendline liquidity, any kind of liquidity inside of a 4-hour zone, price has a really high chance to sweep this liquidity to the upside and make this zone a sell trap zone. So once again, I'm asking you to backtest this scenario, because you're going to find lots of examples for this. You're going to find lots of examples, and you'll be able to make data. You'll be able to gather data, because in the past, I saw that lots of you guys are considering these sweeps to the upside as breaks of this supply zone, for example, and you're going to find what do I mean? Long opportunities right here. You will be looking for long opportunities right here, and you don't care about the liquidity. I'm just asking you to test these scenarios, because you're going to find lots of examples for this scenario. Okay, so there's liquidity. If there's liquidity inside of a higher time frame zone and price sweeps this liquidity, then this will be a liquidity to take for a higher time frame zone. Once again, this is liquidity to take. Why is it a high probability setup? It's a high probability setup because price sweeps the liquidity. Price sweeps the liquidity before it makes its major movement. So all of this liquidity is getting swept out. All of this liquidity is getting swept out. Then it creates a break of structure or a change of character, or a new change of character here to the downside. And the simple fact that price swept out this liquidity and printed a new high right here, which is not directly part of a liquidity, but swept liquidity. Then after a liquidity sweep, it created a cancellation major movement. It will make it a higher probability, because there's no more liquidity needed to be swept above or below this zone. If price creates liquidity for this zone, once again, that will be a really, really, really high fucking probability setup. But if this zone, this movement swept out the liquidity from this side, then this high right here, which created the next major movement, won't be part of the liquidity, because it has swept liquidity beforehand the movement that has happened, beforehand the major movement that has happened. So if you see something like this, where price sweeps liquidity inside of a higher time frame zone and just simply slightly breaks above this zone, or just simply, wicks above, then after the sweep, it continues the major movement to the downside and continues a really impulsive movement, then this will be a really high probability setup. And this is a really, really good liquidity to take for a zone, liquidity to take for a higher time frame zone, because this isn't a direct liquidity to take for this zone, because there won't be liquidity directly for this zone, but in itself this zone was a liquidity to take. This zone has taken liquidity, so it will be liquidity to take criteria for this zone, and it will be a really, really strong liquidity to take scenario. But if price creates liquidity for this zone, once again, it will be a really nice scenario. And of course, if price taps this zone, then here will be liquidity to take, the first one. And for example, price comes up on the 1-minute chart, creates an entry opportunity, creates double taps for the 1-minute zone right here. It will be another liquidity to take. Combined liquidation, as you remember, it will be a combined liquidation, because if price sweeps this liquidity, then both of these zones will be confirmed. Why are we using these liquidity confirmations? Why are these zones a high probability? Why are these liquidity scenarios are good according to our strategy and plan? Simply because we want to enter after everyone has been swept out, right? Simply because we want to enter after all of the stop losses are getting swept out from the market. And if the stop losses are getting swept out from the market, we can safely enter. Because if the zone below our zone is getting swept out, then our zone has a high chance to not be part of the liquidity and to work. And if all of these confirmations, all of these combined liquidation scenarios are getting lined up, for example, in one setup, so the 15-minute sweeps liquidity, or the 15-minute zone has liquidity, and price sweeps liquidity in the 15-minute zone, and price changes character, continues the major movement, creates the fractal confirmation, and prints liquidity to take for the 1-minute zone once again, then it will be a really fucking high probability setup, and we want to be in this trade no matter what. We want to be in this trade no matter what, if all of these criteria, all of these liquidity scenarios are getting lined up. Most likely in these cases, I'm just simply entering on the downside of the zone and the 50% of the zone too. So I'm setting a double limit order. Yeah, because I just want to be in the trade. I'm setting a double limit order because you want to make sure that you will be in this trade, because this is literally, this is one of the highest probability setups that we can use in our entry models. I mean, this kind of a liquidity sweep, when price sweeps liquidity from inside of the zone and reverses instantly and creates the major movement once again to the downside and sweeps liquidity into the zone and creates 1 minute liquidity. This is the setup that you want to take every single time. But if you paid attention right here on the structure that I just drew, you're going to ask that, I mean, let me just read the question again. Where was it? Yeah, what's the difference between a liquidity take and liquidity target? If you paid attention to the structure that I just drew here, you're going to see that I just simply drew a liquidity target too, right? And this will be the highest probability setup that you can take, playing around with liquidity. So here will be triple touches trend line. Here will be a perfect trend line. You're going to enter here on the trade, right? You're going to enter here because all of the liquidity has been swept before you entered. All of the sellers have been swept out. All of the early sellers on the higher time frame, all of the early sellers on the lower time frame have been swept out. So you enter in a trade, right? Why do we use liquidity to target? Why is it important for us to target the liquidity? Because simply just twist this around. You're playing around liquidity on this side, on your entry side. You want to play around liquidity on your TP side too, because these buyers right here, these buyers, because market is always double-sided. If you're selling, there has to be a buyer. If you're buying, there has to be a seller. If you're literally doing something or anything on the Forex market, there has to be someone on the opposite side to do the exact opposite thing that you're doing at that exact same time. So, of course, we are playing around with liquidity on the sell side for entry opportunities. We're playing around with liquidity on the TP side too, because if there's liquidity, then someone will look at these zones, someone will aim for these zones, and someone will wait for these zones to be tapped, and someone will spot this liquidity also, and this will be their liquidity to take, for example, for the longs. And you have to play around with liquidity, because if this liquidity will be swept, what will happen? Simply based on the liquidity theory, what will happen if this liquidity is getting swept? Price will reverse, right? If this liquidity is getting swept, then price will reverse to the upside based on the convert between the orders, convert between the buyers and sellers. If all of these stop losses are getting swept out, this stop loss is getting swept out, this stop loss is getting swept out, this stop loss is getting swept out. So all of these stop losses are getting swept out. What price will do? They will, BFIs, banks and funding institutions will try to open positions, and not just try, but will be opening positions on the next recent order block. So for example, here's the extreme order block, and above this order block, we have liquidity, right? And this liquidity is getting converted. So all of these old stop losses are getting swept out. The new orders will be opened here. Then we want to TP your positions on the next recent zone, above/below the liquidity. In this case, of course, below the liquidity, because we are aiming for the short side. So we want to TP right here on this block, because if this liquidity is getting swept out, then this zone has a really high chance to actually reverse price to the upside, regardless of the structure. Because currently our major structure is bearish. 4-hour bearish, 15-minute bearish, 1-minute bearish, everything is bearish. So regardless of the structure, price has a high chance to reverse on this zone, and for example, sweep more liquidity from this sell side right here. Because right now, this is liquidity. More liquidity has been created after you entered. There was no liquidity before you entered, because this swept liquidity. This high has swept liquidity. Your zone has swept liquidity. So technically, your zone and the high that you were aiming for, the high that you were expecting a reaction on, so your POI had no liquidity and was not directly part of the liquidity. But since you open positions here, since you open positions right here, and so many other sellers open positions right here on the 15-minute block, along next to you, it open positions on the 1-minute block too. This will be new liquidity. So new liquidity has been formed here because your orders are resting here. Your orders are resting above this line, right? So price is a chance if price is a chance if it can break below this demand zone, then it has a chance to create an upside reversal to sweep this liquidity and create another confirmation here to continue the major movement. So that's why you always have to pay attention to liquidity, because basically markets are moved by liquidity. If there will be no liquidity, there will be no Forex markets. Actually, markets are moved by liquidity. And this is my major thing that I'm looking for. Liquidity is the major thing for me. Of course, alongside with structure. If you're combining structure with liquidity, you'll be literally unstoppable. And you have to find the liquidity areas. And that's what I want to talk about. Shipping markets question, that what is good liquidity to target? When it will be a criteria? When it will be a criteria for us? So, in counter trend trades, you always have to have liquidity to target. There has to be liquidity target if you're trading the counter trend. Sorry, let me just drink a sip. If there's no liquidity target, then you're not going to enter in a trade. Of course, in a counter trend scenario. Why? Because just imagine that you're entering here in a counter trend. This is a really, really, really strong counter trend trade because 4 hours bearish, 15-minute bearish, 1 minute bearish, everything is bearish. Simply price just created a fractal confirmation here, but reacted here on this demand zone. Let's say there's a 15-minute demand zone, price reacted on this demand zone, printed a 1 minute confirmation here with strong change of characters. You're going to enter here and you're going to TP the less recent 15-minute/5-minute zone, right? So that's the last TP point for the counter trend trades. So you're entering here. If there's no liquidity to take right here, there's no liquidity to take. So it's just a simple tap. Just imagine that this right here is a simple tap. If there's no liquidity to take for your counter trend trade, then you're not going to enter. Why? Because if there's no liquidity, then this zone has a chance to reverse price. And if this zone has a chance to reverse price, then it will aggressively reverse price because your trade is a counter trend movement. This trade right here is a main trend movement. And it will aggressively reverse price to the downside and sweep you out immediately from this trade. But if there's liquidity right here, just like I drew it on this line, if there's liquidity, then price has a high chance to sweep this liquidity because, as I said, if there's a seller on the market, there has to be a buyer on the market. And more likely the convert between the sell orders and buy orders will happen between you and this seller. And if there's liquidity, then there's a safe way up to this zone. And this is why we call this a counter trend trade, because all of the other traders, the majority of the traders, the majority of the banks, majority of the BFIs, funded institutions, everyone is waiting technically right here. Everyone is waiting right here. And you just enter the position here. If there's no liquidity that will help you to actually convert your order into a sell order, then you won't be able to TP your position. You won't be able to make it up here. You won't be able to actually make profit from this trade because there's no liquidity for your order to be filled up. And just always take a look at both of these sides, both sides of the market, because there'll always be a buyer and there's always be a seller. And answering to the question that what is a good liquidity target? What will be a good liquidity target for us? What is the final liquidity target to call? When do we call it a liquidity? Because there's always liquidity on the charts. If I switch to the 4-hour chart, there's always liquidity on the charts. There's liquidity. If you enter there's liquidity, If you enter along here, you could say that this is a liquidity target for us. No, realistic liquidity target. So for example, liquidity target could be a weak low, a weak high. If you have a weak low / weak high, that will be a realistic liquidity target. You're entering, not entering. Here's this low point. You're entering here on this 1 minute order block, and this low point will be weak. Why is it weak? Because technically it couldn't break above the last recent strong high point. It will be weak. So you're going to TP on the last weak low point, right? You're going to TP on the last weak low point because if this is weak, and let's just talk about this one first. So this is weak too because it couldn't break over the last recent high point, couldn't break this 1 minute high point, and just creating lower lows, right? So this will be weak. But let's just take a look at the next low point. Is this weak too? Yes, this is weak because it couldn't break over the last recent high point. This will be weak too. Is this weak? Yeah, this is weak because it couldn't break over the last recent 4-hour high point. Couldn't break over the last recent 4-hour zone. So basically, all of these bottoms, all of these touches will be liquidity. All of these touches will be liquidity to target. So technically, this is the last recent weak low point. This will be the last recent liquidity to target for us. And we're going to find a good zone below this liquidity. So for example, there's this liquidity. We can find a good demand area somewhere around here. Then this will be the liquidity to target for us because there's liquidity. And we are targeting this liquidity and we are expecting a reversal right here on this zone. because this zone has a high chance to reverse price, regardless of the structure, as I said. Just simply because pure liquidity rules. Pure liquidity rules. There's liquidity, price will make the conversion between the buyers and sellers right there on this block. There's a chance that this convert will be just a small pullback right here. So if we just simply create a small pullback and immediately flip this zone, but you want to take profit right here, because if you take profit right here and the flip happens, then you'll have new options. If the flip happens, then you have new options right here on the flip zone. If the flip can't happen, but price changes character right here, then you have new options basically entering on this new demand zone, targeting this liquidity on the upside here. So technically liquidity, if you're looking for a liquidity to target, always take a look at the low points. I mean, of course, in the short example, in the long example, take a look at the high points. So always take a look at the lows and the highs that are those weak. If a low or a high is weak, then more likely it will be liquidity. It will be liquidity to target for you, and more likely it will be broken. Why? Because it's weak. Every weak high and low point has a really high chance to be broken. So, answering the question finally, which is the latest point that we consider as liquidity to target? In a range, if I'm talking about risk-reward ratio, because we are all using 2 and 3 pip stop losses, in a range, that will be somewhere between 1 to 10 or 1 to 50. So between 1 to 10 and 1 to 50, if there's a good liquidity target, that will be the final liquidity target. And as I said, just take a look at the strength of the lows and highs. Take a look at if it could break something. Take a look if it could flip something. Because, for example, if this zone, I mean this low point right here, flip the supply zone somewhere around here, a valuable supply zone, and it has a lower time for liquidity right here for it, then this will be the final target point for you. Because you can expect a reverse on this zone, because you can always expect a reverse on strong zones, regardless of the structure. So if this zone, for example, flips something right here, has a lower time for liquidity target right here above the zone, and there's one more bottom, because it created a flip right here, created a flip the zone, and there will be liquidity. Then this will be a strong zone to target. For example, it will be 1 to 10 or 1 to 15 target point. You're going to target this zone because it has a chance to reverse price to the upside. It's a chance to actually create something that will sweep the upside liquidity too. If it can sweep the upside liquidity and price reacts on this zone, but flips this zone, then you have a new entry opportunity right here. You can target the next liquidity target here. And for example, it will be 1 to 20 risk-reward ratio trade. And after this, you have a new chance to target here, or you have a new chance to wait for a long opportunity. So the ideal liquidity target will be somewhere between 1 to 10, 1 to 50. But the major thing about this is look at the strength of the low and high points. Always look at the strength of these highs and lows, because that will indicate the strengthness of that liquidity that you can target. That will indicate the strengthness of that low/high. If it has a chance to sweep anything, it has a chance to reverse price to the upside, or it's just simply part of the overall liquidity. So, always take a look at the strength. Okay. If the liquidity is months back, PY in February in 2021, the chart will be, you expect the PY to also valid. Yeah. There are lots of swing traders who are holding positions for years straight, for 2, 3, 5 years. And 2021 was just a simple year ago. It has a chance to actually contain orders. If there's a zone from 2021, for example, from January or February, there's a chance that that zone will still contain some orders. There will be still some orders in that zone and has a chance to reverse price. Has a chance to give some, if there's no orders, if there's technically, physically, there are any orders left on that block, then mentally, it will still be a valid zone. Why? Simply because of let me just show you the weekly chart. From 2002, there was a demand zone. There was a demand zone from 2002 and several other demand zones, for example, right here. Just imagine, who the fuck is holding their positions for 20 years straight? Here's this 2002 demand zone. price reacted heavily. Just look at this reaction. This was the reaction on that demand zone. Why? Simply because it has a psychological power. Because just like we, other communities, other banks, other BFIs, everyone were expecting a reaction on this zone. But technically, there were no resting orders on this zone anymore because it has been formed 20 years ago. But mentally, psychologically, it still had a power because, it's still a demand zone and it's on millions of traders' charts. Millions of traders are expecting a reaction on this zone. Millions of traders are going to place limits on this zone. And that will indicate a small bump in the market. You can actually see that this movement right here. So this movement right here. So this was the demand tap from 2002. And this small movement to the upside was indicated by the retail traders, right? Because only retail traders can indicate these slow volume movements in the market. And only BFIs, banks and funding institutions has the power to actually indicate these high impact inefficient movements in the market. So retail traders can cause this much in volume inefficiency in the market. Retail traders can cause this inefficiency and this volume in the market because this is an efficient. This is simply an efficient movement, and there's no volume in these candles. Retail traders can cause these movements. BFIs can cause these movements. And this simple scenario right here, that price react on this demand zone, proves the fact that this demand zone, has a psychological power because retail traders entered here and, caused a low volume movement. Okay, any other questions about this liquidity topic, liquidity take, liquidity target? I don't know if I could answer your question, or was that the thing that you were asking? Let me just read the chat. Okay. I know it's covered in a webinar somewhere, but could you explain once again why equal candles are not liquidity? Tim, I believe it's not in a webinar. It has been explained in a recap video. Yeah, it was a recap video. If you just simply type the... Okay, let me just find it on Discord because, I received this question lots of times before. Let me just open Discord. If you just simply open the search tab, and there will be, setting options, search options, where you can find in a specific channel. Yeah, find in a recap, New York recap channel. You just simply type in New York recap, and you just simply type in equal. And the first thing that pops up is, what is liquidity? 4 equal candles, iron main order flow, blah, blah, blah. This is how you can search. I'm always mentioning the keywords in the videos. So if you're looking for something, for example, equal candles, then you can just simply type in equal candles in the New York recap section, and it will automatically pop up. That's why I'm always using keywords. It's making easier to search for something. Here it is. I was looking in the New York recaps. I just typed in equal, and why 4 equal candles aren't liquidity. Okay, so yes, no, everything understandable? So we can continue with the tab analysis. Yeah, all right. Okay, just a minute, guys. I will just simply stand up and go out for a cup of water. Please, Shanti, keep them a company. Just a minute, and I will be back. Are you here, Shanti?
Yeah, for sure. I'm here. Hey guys, what about the session? Do you enjoy it?
Yes, a lot.
Yes, definitely. Very good session so far.
I think the explanation part of the first half, it was pretty good. believe many of your questions are covered in the first half.
I think it covered probably the 80% of the course.
Yeah, it was really good. So informational. Hey, tuning markets. It was pretty good. London session was absolutely arranging session, but basically my plan worked out, and that's why I opened the position at the 1 minute zone that I actually sent into the update channel. How was your London session, guys? Oh, sorry. Are you back, Marcel?
Yeah, you can ask your question.
There is no question. So you can continue freely.
I will.
Nice.
Alrighty. So, as usual, what is this? Eye of Sauron. So, let's go. Let's freaking go, guys. Okay, so this will be a completely blind analysis because I haven't looked at charts since a week right now. So let's just start on the 4-hour chart. Okay. Let me just take a look, just a minute peek at the charts to get back on track. This was the 2002 demand. Yeah, this was the 2002 demand. Price created a flip zone right here. Yeah, let me just mark everything real quick. There was the flip of that zone. And there was daily supply zone that we were reacting on right here. Supply zone mitigated. Yeah, exactly. Liquidity has been swept into the supply zone. Perfect liquidity has been swept into it, or we can rather call this liquidity. This is a perfect trend line liquidity with 4 equal touches. Yeah, this liquidity has been swept into the daily supply zone. Relatively 50% of the daily supply zone has been mitigated. And here was a swing breaker structure there. This is another daily supply zone mitigation right here. This is a daily supply mitigation too. Yeah, and guys, actually when I'm missing out for a long period of time or some few days, I'm just skipping trading for a few days, or I'm not backtesting, or I'm just on a trip, or I'm, not in front of the charts for a longer period of time, then I'm just always doing this. I'm just talking myself. If I'm not hosting a session, I'm just simply talking myself, doing the exact same things that I'm looking at the charts, saying that, okay, here was a daily supply zone mitigation, price reverse instantly. And I'm just marking the things. I'm just marking the things for myself too with this tool highlighter. I'm doing the same thing as I'm doing right now. If I'm in myself, I'm just saying the things out loud, because if you say the things out loud, that will actually help your brain, help the muscle memory, your actual, I don't know how to say this, your memory to remember for these things. And if you just simply say it out loud, it will make you better. Just trust me. If you're doing it silently and you're just simply staring at the monitor, that say it out loud. Say it out loud. It will help a lot. It will help a lot to remember for things. Because if you say it out loud, and for example, 2 hours later, session has started, you are trading in the session, kill zone started, and 2 hours later, you don't remember for something. That thing that you said out loud 2 hours earlier will pop up in your mind, and you will remember for things. But if you just simply sit in front of your chart silently and you don't do nothing, you don't talk, you don't take notes, you just simply create your analysis, you won't remember for things that well as you're saying things out loud. So just simply say the things out loud. Say that here's a daily zone. This daily zone has swept the supply zone out. This supply zone has swept liquidity. This liquidity has been built up for this daily zone. This daily zone, for example, had liquidity, and this liquidity has been swept into the daily zone. Then it created an aggressive reversal. And 2 hours or even 2 days later, you will still remember for the same thing. You will still remember for the same thing because you said it out loud. And your brain has an ability to remember for these things. But if you're not saying out loud, or if you're not writing this down, you won't be able to remember for this. So words has power. And if you're writing things down, if you take notes, that has power too. You're going to make progress easier. So just say the things out loud. People won't think that you're crazy. You're not talking in yourself, you are talking to your monitor. That's a much better thing that you would than if you would be talking to yourself. So just say the things out loud. And let me just continue. Okay. So yeah, price reacted on this. Talk to your team. Yeah, exactly. Price reacted on this daily zone, right? So we are still following the daily structure. As I said, as I broke it down in the previous, I believe it was a weekend forecast video. Yeah, this was a weekend forecast video, if I remember well. So I broke it down that price is still following the daily structure. No, it was on last week's webinar. I broke it down on last week's webinar, last Wednesday. So check out that webinar. I broke down the higher time frame. I broke down the weekly and the daily. I broke down the connection between the weekly, daily, and 4-hour time frame. And I just explained why price will move to the downside after mitigating this demand zone. Supply zone, daily supply zone. I just simply explained that why price is a chance to reverse on this supply zone and create another breakout structure to the downside. And this same thing is happening that I just explained a week ago, because price reacted heavily on this supply zone, daily supply zone. This D is really confusing me, so I'm just deleting it. So yeah. Okay, price left liquidity into this daily supply zone. You know, after liquidity sweep, it created a strong reversal to the downside. Let me just zoom in. This was the last recent demand zone that has caused this sweep and caused the mitigation of this supply zone that technically this demand zone right here is weak. Why is it weak? Because it couldn't break the supply. It will be weak because the only purpose of this demand was to sweep this liquidity into this supply. And more likely, as I said it on last week too, and some other guys said that this demand will be broken on last week too. So congratulations to them. You were at the right side of the market with me. So as I said on last week, this demand will be broken. And, you know, a few days later, it has been broken. Sorry, I have to break down everything because, you know, I haven't been trading since this price action right here, or this price action, I don't remember. And I have to break it down for myself too. So I'm just simply analyzing everything. So this demand has been mitigated right here. After this mitigation, I just simply said that it won't break structure to the upside. It has a high chance to simply flip this demand zone and continue the overall main movement to the downside. Why? Because a daily zone and a daily structure that price is simply following since months or years now will always be stronger than a random 4-hour substructure, because this is a substructure right here. This is the pullback of the daily order flow. This is the pullback of the daily leg. This is a simple daily leg. This is a simple daily pullback, simple daily leg, simple daily pullback. Of course, on the 4-hour chart, we're going to see lots of structures. On the weekly chart, we're going to see a different structure too. But as I said, I explained it in the previous webinar on Wednesday. It's a really, really, really fucking important webinar. So watch that webinar, please, guys. Watch the last webinar that you can find in the Telegram. Just watch it twice. That's it. So after this mitigation of this demand, price just simply flip this demand. And I'm asking, which one is the correct demand, supply zone right here? If you raise your hand first, you can answer the question. Which one is the correct supply zone that has flipped the demand zone right here? Michael?
Yeah, I guess this one, because efficiency started from here.
Exactly. Thank you for the answer. This is a supply that started the inefficient flip of the demand zone. So we have a valuable 4-hour supply zone right here. Okay, if you don't mind, I'm just going to delete these things because these are annoying. And I still have to upgrade my trading view. Yeah, I haven't backtested for a week now because, you know, I wasn't home. And we have this valuable supply zone that flipped the last recent demand zone. And technically, this is the character changing supply because it indicated a change of character right here in the order flow and also a flip, right? So this is a character changing flip. Okay, what else can we see? That below this supply zone, we have nice amount of liquidity, you know, momentum slowed down at this region. This is just compare this movement, just compare this momentum to this momentum. Momentum really slowed down. The major movement has kicked in the market from this candle. There's this inefficiency, there's this momentum. This is a momentum candle. This is just a slow momentum. This is just a liquidity building structure, but this is still a structure, right? But on the 4-hour, this will be a liquidity. This is a pure liquidity, sorry, on the 4-hour chart. But that doesn't mean that we can't trade. That doesn't mean that we won't be able to find setups. That means that we have to drop down to the lower time frame to find setups on the 15-minute chart somewhere around here. Okay, so this liquidity has been built up for this 4-hour zone right here. What else can we see? We can see that price simply reacted on a demand zone somewhere around here. We can call this as a demand zone. We can call just the body or just this one as a demand zone. Yeah, technically none of these are efficient, but there was liquidity inside. You know, here was liquidity inside of this demand zone. So if there's liquidity inside of the demand zone, we can expect on a deeper mitigation of this zone. And the 50% of this zone has been mitigated. Oh my God, what did I do? Okay, I'm here. So 50% of this zone has been mitigated after the liquidity sweep. You know, this liquidity right here has been swept into this deeper region of the zone right here. And after this, price more likely created a 15-minute change of character right here, and also created a 4-hour change of character right here too. But there's no clean 4-hour zone that can be marked, that we can mark out. So we will just simply use the 15-minute chart right here and look for a 15-minute zone, because this is how structure works. This is exactly the same scenario that I just explained previously, right? This is exactly the same scenario that I just explained half an hour ago in the educational topic. That here's the structure. Main structure is bearish. Of course, main structure is bearish. Fractal confirmations are technically happening right now. But on the other side, there will be a buyer. There will be buyers in the market who are looking for buy trades. And you'll be able to look for buys after this supply because there's liquidity. You know, there's liquidity. The only difference is that this is the higher time frame. So technically, it won't be a counter trend trade. If the 15-minute and 1-minute changes character, it will be a pro trend trade. But this is the exact same scenario that I just drew half an hour ago, right? Because, as I said, this is part of the liquidity trend line. This is a liquidity trend line. This will be a liquidity trend line right here. If this low can take out this supply, then it will be weak. Then this will be liquidity for this zone. And we will be able to target this zone right here. So find a target point or this low point right here. Overall, the weak, the strong break of structure right here will be the last target point that we can aim for. But I don't know if you can see the logic behind this. I don't know if you can see the logic that I just explained, because this is the perfect live example for this. And I promise I didn't set this up. So I'm just literally being amazed by how simply price works and how amazingly it works on everything. But you know, these are weak. This is part of liquidity. This will be part of the liquidity, but we'll be able to take longs after this supply zone if a confirmation is being printed, simply because here's liquidity. There's liquidity, and if price can break below this low, it is this demand right here, then it has to collect liquidity in order to continue the main movement. And if there's liquidity, it will collect this liquidity in order to continue the main movement. If the main movement will be continued, so if price reacts on this supply zone here, then this will be liquidity, you know, because this will be weak. This is weak. So this will be the last TP. This is the last point of the week. You know, the last weak low point on the 4-hour chart. But on the daily chart, this will be the last weak low point because, you know, this is the daily structure. So on the daily chart, this is weak. This is a weak low point. So could be the last recent, not last, but last point of the liquidity to target. But if you are trading according to the 4-hour chart, this is the last point that we can target, the extreme demand zone that has liquidity above it. So can you see the connection between these? If price can create a confirmation entry right here on the 15-minute chart, and more likely it's being created right now, then price will come up to this supply. And this is the highest probability on the 4-hour chart currently. Price will come up to this supply zone, sweep all of the liquidity. If this liquidity is getting swept, and if price prints a reaction and confirmation on this zone, then this will become liquidity. This right here will become the liquidity to target. If this is becoming the liquidity target, we'll be targeting this, and this will simply line up with the main trend that we are following, right? Because daily bearish, 4-hour bearish, everything is bearish. All we have to do is wait for all of the confirmations, fractal confirmations. Fractal confirmations can happen also here inside of this demand zone right here. Because, you know, technically, all of the criteria are given. If the 15-minute change of character happens here, then if the 1-minute change of character happens inside of the 15-minute zone, and there will be liquidity target, which is right here, there will be liquidity for this zone. So liquidity to take, another liquidity to take, and good criteria, you'll be able to enter in a long trade targeting this supply. So can you see the connection between the liquidities? Can you see the connection? How can we use the liquidity and every single liquidity is there for a reason? Liquidity isn't random. Liquidity will be there for a reason. This liquidity has been built up here for a reason. to trap sellers, trap more sellers, and continue the daily structure. Liquidity has been trapped, swept, continuation happens. Liquidity has been created, more likely a trap will happen here and the supply will be mitigated. More likely another buy trap will happen here because, you know, if this movement is being created to the upside, loads of retail traders will enter in this long. Why? Because, you know, trend line has been broken, resistance level, blah, 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 blah. So they're going to enter here on this line, somewhere around here. But this is part of the liquidity, so it's going to be taken out. Everything is there for a reason. Liquidity is there for a reason on every single occasion. All you have to do is understand the liquidity, and that's why I'm here. That's why I'm trying to help you to understand the liquidity. Because if you master the liquidity and combine it with structure, you're going to be unbeatable. And yeah, this is the highest probability setup right here. The price will sweep the liquidity to the upside, come up to this zone, sweep the liquidity to the downside, come down to this zone, and decide this final direction on this demand zone. 4 hour. This is the 4 hour chart. Let me just drink. Okay. I have to upgrade my fucking trading view immediately because these ads are so fucking annoying. All right. Sorry, let me just see another. I forgot to mark this zone. I will just mark this because it will be easier to find the 50-minute demand zone, but the whole zone is right here, you know. Okay, perfect. Here's a perfect 50-minute flip zone that we can use. Very nice, you know. This zone right here is part of the 4 hour zone. So, as you can see, this was technically the less recent structure breaking momentum creating supply zone up here. Below this, we had liquidity. This was liquidity. It couldn't even break structure to the downside. It became liquidity. After this, price fed this liquidity to the upside, mitigated this supply zone, this 50-minute supply zone, created a retracement, and from this retracement point, price just flipped this zone. So this is a really valuable demand zone right here, which lines up with the 4 hour 2, had liquidity on the 50-minute chart inside of it. As you can see, double bottoms, so we can expect a deeper mitigation on the 50-minute chart. Had the 4 hour liquidity right here also, and price just simply reacted on this zone after sweeping more liquidity into this zone. So just look at this. We have really fucking huge amount of liquidity right here. 1, 2, 3, 4 touches, or five touches right here. So we had 5 equal lows right here on the 50-minute chart that has been swept. After a sweep of this liquidity, price just instantly created a change of character. And yeah, just technically, let me just remove this liquid line from here because it's annoying. We already know that there's liquidity. You just have to keep in mind. If you're saying it out loud, you will be able to keep it in your mind. So you don't have to keep these shitty liquidity lines on your chart because these are making everything messy and fucking up your OCD. So the liquidity has been swept into a really valuable demand zone, but it's only valuable on the 50-minute chart. As you remember, on the 4 hour chart, it's still weak. This is still a weak demand zone because it couldn't break above this supply zone. So it's still a weak demand zone on the 4 hour. On the 50 minutes, it's valuable. And if it's valuable on the 50 minute, it has a chance to give a retracement up to this valuable 4 hour supply zone here. And if this 4 hour zone is being tapped, we can actually wait for a confirmation to go for a short trade. So, okay, let's see. Let me just zoom in. So here was a sweep. Oh my God. Sorry, my nose. So here was a sweep, right? Sweep has happened. Breakout structure has happened. Less recent 50-minute high point. This was a less recent 15-minute high point that has been changed. Okay, what else can we see after this? We can see that there's loads of liquidity right here. And this liquidity has been swept. 1, 2, or relatively 1, 2, 3, 4, 5 equal bottoms has been swept with this movement again. And of course, obviously, the structure has been changed. I mean, you know, breakout structure has happened here. Price broke below this low point. So technically the structure has been changed. So technically price has changed by the structure once again to bullish right here. So yeah. Okay. Can you just mark, if you raise your hand first, you can answer the question. Can you just mark that where price was reacting on after the sweep of this liquidity? Muhammad, where price was reacting on after the sweep of this liquidity? That's incorrect. That's not a valid supply. That's correct. On this supply, right? Not supply, sorry. Fuck me. Demand. Yeah. Please, if you draw on my screen, just remove your drawings. So price reacted on this demand zone, because technically this is a flip zone. There was a valuable supply zone here. This is a supply zone, or this is a supply zone. Also, deeper region of this higher supply zone has been mitigated, 50% been mitigated. Price couldn't close inside of, couldn't break above, couldn't close above this zone. Technically swept this liquidity from this zone, from above this zone. After this, it couldn't create a new breakout structure to the downside. So technically created this flip zone. The body has been mitigated, so we can expect 50%. The wick lines up with the 50% exactly. There was liquidity inside of this zone. Liquidity has been swept into this zone, and this zone did hold price, couldn't even break below this zone. There was no liquidity, couldn't break below this zone, close inside of this 50-minute zone, and started the bullish order flow to the upside again. And here comes the big question. Now that we know what has happened in the past, what will happen in the future? What can we expect in this session? If you take a look at this, there's a huge fucking liquidity line again. So technically, not change of character line, liquidity line. So technically, everything on the chart is liquidity currently. Everything is liquidity currently. But we still have a valuable zone right here, which I will refine on the 5 minutes. Sorry. Let me just refine it instantly on the 5 minutes, because I believe it will give us a nice zone that is not part of the liquidity. I will just simply use this zone because technically this is the efficient starting zone. Okay, so it has been refined on the 5-minute chart. And what can we see right here? Technically, timeframes are getting fractally confirmed, right? Technically, timeframes are getting fractally confirmed. 4-hour zone mitigation, 15-minute change of character, started to 15-minute order flow, built up liquidity to target right here for the supply. And also, this is liquidity to take for the supply, liquidity to target for the longs. After this, the 50-minute zone has been mitigated, liquidity has been swept into the 50-minute zone. Fractal confirmation is happening once again. If this 5-minute zone will be mitigated and 1-minute confirmation will happen here, then I will be entering in long, more likely. Because, liquidity is getting swept into the zone once again. If this liquidity is getting swept into the zone, and price can print a confirmation on the 1-minute chart and print a really high price re-entry, I will be entering and I will be targeting this supply up here with swing TPs. If you enter somewhere around here with, for example, 2.5 with stop loss, then your final TP on this supply will be 1 to 66. So 1 to 60. If you're using a 3-pip stop loss, it will be 1 to 55. So this is a really, really good scenario that could happen. And as you can see, we have a realistic TP2 right here. I will just use the wick and the body combined together. This is a realistic TP for longs. Because I'm asking you, why is it a realistic TP? If you raise your hand, you can answer the question. Why is this supply zone right here a realistic TP? Who raised the hand? Michael?
Yeah, because it just made a choke on this one, and it could be a valid supply with liquidity on it.
Exactly. Exactly. Perfect. Thank you for the answer. This is a realistic target, and everything that you said was valid. It was perfect. And the last reason is that we are currently inside of a range. We are inside of a 4-hour range, and sorry, not 4-hour, 50-minute range. And I don't know if you remember for this, what did I say like 1 month ago or 2 months ago, when price was creating the exact same range on the 50-minute chart, that we are playing around liquidity in ranges. If there's a range, we are playing around liquidity. If this liquidity is getting swept, then the liquidity on the upside will be swept. If this liquidity on the upside is getting swept, then more likely price will come down to create another range. And price is just moving in a range, right? It's moving in a range, up and down, up and down, up and down. And we want to play between the liquidity and supply ranges. Supply demand ranges. Target liquidity, wait for liquidity, target liquidity, wait for liquidity to be swept, wait for liquidity to be created, blah, 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 blah. If this zone is getting tapped right here, then we'll be able to wait for a 1-minute long confirmation targeting this zone up here. If this zone is getting tapped right here, if this zone is getting tapped right here, then we will be able to wait for a confirmation targeting this zone. After this zone is getting tapped, we can do the same thing, targeting this liquidity. Play around liquidity. Play around liquidity. This is what we can see on the 15-minute chart technically. Sorry, I forgot to mark. I just wanted to mark that this was the last recent demand zone. Okay. That price for reacting on. That broke the structure.
Marcel, what about this shadow? This one.
Sorry?
What about this one? This shadow, this inside bar.
Did it break something?
Actually not, but it can be counted as a
What are the
extreme
rules
one.
for a zone? What are our rules for a zone?
Inefficiency, BOS. It doesn't have any BOS, but
It doesn't have any inefficiency. It doesn't have
yeah,
any.
yeah.
It's literally nothing. The correct zone in this case is this one, right? Why? Because it broke a demand zone, created huge inefficiency, and has liquidity. Technically 3 criteria versus 0 criteria. If price will come up inside of this zone and create liquidity right here, then it has a chance that this zone will be tapped. But if it happens, then more likely this zone will be mitigated. But you know, this is nothing right here. It's just a simple wick that created nothing in the market. Okay. Switching to the 5-minute. You know, 5-minute is exactly the same because I just refined this zone. I won't refine this because it almost matches. I want to keep the 15-minute zone right here. There's liquidity, there's liquidity. What else can we do in this case? I'm just asking you. Write it down in the chat. What can we do in this scenario that we can see in front of us? What are we waiting for? What do we have to do? Everyone, type it down. Everyone. Just type. Jeremy, come on. I just literally said a Hungarian word. My brain is farting. And that's it, guys. Correct answers. Everyone wrote down the correct answer. Wait for liquidity sweep, waiting, sit and wait, range sweep, wait, liquidity sweep, wait. That's what we have to do. Wait. That's what we are waiting for. And let me just tell you a thing. The thing that we are waiting for is right here. High impact news will be released in 23 minutes. This is the thing that we are waiting for. This news will have an impact to sweep one side of the liquidity. We are waiting for this news. This is our Messiah. We are waiting for this Messiah to sweep the liquidity and create something for us. But in the meanwhile, no fucking chance that I'm dropping down to the 1-minute chart. No fucking chance that I'm opening a 1-minute chart. I'm going to stay on the fucking 5-minute chart and wait for any kind of sweep, any kind of, you know, direction, any kind of sign that price decided in this direction. This is the fucking Messiah that we are waiting for. If it won't happen, I mean, the sweep won't happen. I mean, if any clear movement won't happen, but price stays inside of this range, I will stay the fuck out. It's not a priority for me to trade today. It's not a priority for you to trade today. The priority should be to take the high probability setups. The priority for you should be to take only take the actions when these are high probability setups. The priority for you should be to wait and sit on your fucking hands until you see something clear. Right now, not a single shit is clear. All of this is just liquidity. All of this higher time frame picture is just liquidity. All of this zoomed out higher time frame picture is just liquidity. Every single time frame is liquidity. We need a clean direction. We need a clean direction that will build itself up from the lower time frame to the higher time frame to the higher time frame. We need a clean direction that will build itself up. That's it, guys. Technically, no fucking chance that I'm going to enter the 1-minute chart currently without a sweep right here. I don't care about this structure right here. This is not a structure. This is just a poop. This is a single big poop right here. You're not going to care about this region right here. You're going to care about this one and this one. These are the only zones that you care about currently. And sorry for being so aggressive, but you know, the passion that drives me away. I can be caught up in the moment. I hope you don't take it personally that I'm swearing and saying fucking and shit like this, but the passion drives me away. What's the time? Oh, yeah, session has started already 10 minutes ago. Ages ago, it was a bull flag. Actually, okay. New strategy, guys. This is a bull flag. This is a flag. If price breaks above this bull flag, we are going to simply enter on the retracement, the retest of this trend line. If it breaks above, we're going to enter here on this trend line touch, targeting this one. If it breaks below, we're going to enter here on the trend line touch. That's it. Just kidding. Don't take it seriously, please. And that's it for today. I will stop the recording, but I'm going to stay for a few more minutes. If you have any questions, you can ask your questions, but I won't record the question and answer.